Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to discuss with you a theory, a thesis about the future of the world and how crypto could kill America. Okay, now it's a dramatic title. It's probably not quite so dramatic, but I'm going to use this as a context for understanding which places we might want to go to in the future, which places might likely thrive in the future, why certain areas are likely to be problematic, and I think this is going to be a quite lengthy battle, but I do think that I believe in something called the overwhelming power of price. What does this mean? This means that when you have a substantial cost advantage of one way versus another over time, things tend to lean that way, which is why manufacturing goes to China over a period of time, and it's you can try and resist it, you can do all kinds of things, but over time the overwhelming power of price wins out. Okay. All right, before we dive into that, if you haven't already, please smash the subscribe button, nail the notification bell. If you want help with any subjects to do with relocating yourself or your business internationally, setting up, maybe you don't want to relocate, but you want to set up your business abroad and pay lower taxes or take advantage of lower cost wages. If you want to get second citizenships, better visa-free access, etc., all these things, banking companies, reach out to me. You can book a call, calendly.com/Michael-Rosmer, link in the description below. Or you can check out our websites, offshorecitizen.net, offshorecapitalist.com. You can send us a message through either of those. We're happy to help you. Now, let's dive into this. So here's the narrative, all right? If you just think about the environment in the U.S., and I'm using the U.S. The U.S. is certainly the prime example here. There's, to some extent, we can look at Canada as having some similarities, but not nearly doing it as well. New Zealand, Australia, UK, a bunch of these, okay? But the major place is the US, okay? And this, by the way, is, there was a comment in one of our videos, somebody commented below, and they said, for Americans, all roads lead to renunciation. And I had a couple people in the last week who I was talking to kind of echo that thought to me. So interesting perspective. Obviously not for everybody. Some people are gonna stick with it, but this is going to kind of give the narrative of what has been and how that's changing and what it's going to look like. Okay, so here's the context. I was having a call with a client the other day who is not from the US, establishing a tech company in the US. And you might ask, okay, well, hang on, you're not from the US, why are you doing this? And the simple answer is access to venture capital. By far the deepest capital pools, the most, the capital that's willing to risk the most, etc. The highest valuations are going to be in the US. Typically, the biggest acquisitions are going to come out of the US, and so you want to go there, okay? Now, let's recognize where this came from. By the way, that's in spite of the fact that, there's a whole bunch of negatives as a foreigner going into the US. Actually, it's worse for a foreigner to be doing business in the US in terms of a cash flow standpoint. So what I mean by that is I set up operations, I have a business that is taxable there, and then I try to take the money out, say, as dividends. That is a worse scenario than an American doing the same thing because you're subject to this holding tax. So depending on which country you're in, that can be terrible, right? So in spite of that, it may be worth it. And I've seen a number of cases over the years with clients where, they're doing a tech startup, they can get VC funding, it just makes sense, in large part because the value of the exit at the end is so big relative to the cash flow they're going to get along the way, okay? All right, so where does this come from? Well, where this comes from is really kind of Silicon Valley developed around, you had kind of some of these early tech companies like HP, you had Stanford, right? This resulted in some success stories around that area. Obviously, Apple being, one of the biggest well-known ones in the Palo Alto area, et cetera. Of course, you had, Microsoft up in Seattle. You had Oracle, you had, these companies that were big financial titanic successes that created a lot of wealth, quite frankly, right? This fed into the internet boom, and the internet boom, again, created the next level of wealth. And for a long, long time, if you wanted to raise venture funding, the place to go was there. As little as, I don't know, maybe 10 years ago, I was hearing some comparisons from some prominent angel investors out of the Valley, just mentioning the stats on the number of VC firms in Silicon Valley compared to Germany. It's well, in Germany there was, I don't remember, 16 or 20 firms. There's 400 in the Valley, right? The difference was, start more than an order of magnitude, right? no other place is even remotely comparable in terms of the amount of capital and the ability to access that capital for these types of ventures. Because of that, what happens? A lot of deals get funded, therefore it creates job opportunities, so it attracts founders, people who want to get funded, and then it attracts people to go and work for those companies, okay? And so you have a really, really impressive bed of talent there that is also pretty unique in the world, right? So you have this combination of talent and capital, okay? And that influx of new people is actually a really good thing, okay? Like immigrants, I know there's certain circles where they're kind of negative, but you have to understand like the selection bias of people who are willing to leave their country to go and pursue some sort of entrepreneurial endeavor in another country is really, really positive, right? These are like the exact kind of people who you kind of want to attract. And so hence you have this ecosystem that grows. Enter the more modern era, right? What has happened since then? Well, financial regulations have gotten much tougher. And this is nowhere more apparent than in the world of crypto, which is why I'm giving you this narrative that crypto is going to kill America, okay? Crypto for the first time has seen not the first time, but I would say maybe for the first time in tech. Of course, you've seen the rise of venture funding in China. That's for sure the second largest market. London is quite a bit behind, Singapore is quite a bit behind, et cetera. There are definitely some other ecosystems. There has been some spread out, but certainly nothing to the extent of the US, and then to a secondary extent China, but more difficult for external firms to come into China and get funding, right? Okay, so when it came to crypto, if you look at something like the founding of Ethereum, I mean, the core team was very international, right? So you had people from all over the world who suddenly made quite a lot of money. Then because of the fact that it was decentralized in terms of the ICO, right? People paying in Bitcoin from all around the world, able to participate, there was a lot of wealth that was distributed, created, okay? And that money then gets cycled into the next projects. Now here's the really interesting thing. The US now makes it really difficult for Americans to participate in a lot of things to do with crypto. So let's start with the fact that in terms of exchanges, something like Binance USA, doesn't have the same functionalities. You don't get leverage tokens. You can't trade perpetual futures. You're not in a situation where you have as many trading pairs. Your liquidity is not as deep, etc. Like it's just an inferior exchange to the global version of Binance. Okay, so that right there, you're like, ooh, okay, this is a disadvantage for Americans. But then Americans are basically kept out of ICOs and IDOs, right? If you consider something like on Binance Smart Pad or BSC Pad, sorry, Binance Smart Chain Pad. So one of the launch pads for launching IDOs, the average uptick in valuation was 23x, okay, over the last few months. That's pretty crazy, right? But consider that Americans were not allowed to participate in that. Now, here's what ends up happening. These other people buy in at like the pre-sale level, right? Again, Americans can't participate in that, or at least American retail can't participate in that. So who's participating then? People from all over the rest of the world, right? Then when it launches on DEXs, right, it goes on to Uniswap or something like that, now Americans can participate because there's no restriction with KYC or something. So essentially what happens is that Americans become the retailers who are buying the bag of the initial seed round investors from around the world. And this essentially is facilitating a wealth transfer from Americans to people around the world, right? What is the consequence of that? The consequence of that is, first of all, if you're somebody doing one of these projects, the place that you don't want to go is the US, right? So right off the bat, because you just can't do it as easily, unless you're talking about like going to big VC firms, which there's a whole bunch of interesting stats around that in the crypto space, so we can set that aside for a second. But suffice to say that the popular fundraising model is largely not through large VC firms, right? So you probably don't want to go. Then you're not going to sell to American investors. You're going to dump on the American investors, so they're more likely to be the ones who are going to take the downside and less who are going to take the upside, right? That's not great. And this is going to culminate a lot of wealth outside the country. As soon as you have the wealth accruing outside the country, you're in a situation, well, hang on a second, then why do we set up offices out there? We don't. Let's just go and set up an office in Ukraine. Let's go and set up an office in Portugal. Let's go and set up an office in Dubai. Let's go and set up an office in Cyprus. Let's go and set up an office in, wherever else, right? Romania, Russia, China, Singapore, whatever, right? Some other place. All right, so now what does this mean? This means that the people who are making the money are suddenly outside the country, and now that money gets recycled outside the country. So now the same factors that drove capital and talent into the US, which was really good for the US over a long period of time. Really, you could argue that California is only alive today. We all know that it's just a total fiscal disaster. It's a administrative disaster. It's a bureaucratic, it's just totally mismanaged, right? So you've got this disastrous management that is only really allowed to survive because of Silicon Valley. You can say Hollywood, but really the numbers that you're talking about in Hollywood are just a tiny fraction of what they are in Silicon Valley. So Silicon Valley is the engine that has powered California for quite a long time, right? And now, all of a sudden, the incentive for people to go there is going down. And in fact, the wealth that is accumulated, the early seed investment, which used to happen in that ecosystem, is not happening there. It's happening outside of there. And instead, the capital is flowing outward. This is really, really bad, right? I don't think that people quite can appreciate how much of a negative virtuous cycle and, in a sense, downward spiral this could create. And if you think that, I think you would be extremely naive and, optimistic to believe that the American governments realize this and are going to reverse their policies in order to say, hey, let's just let American investors into these because we want to be the place that nurtures these crypto startups, and we want to be the place that attracts all the capital, and we want our people to be the first people in so they can get the upside. I don't think so. I really do not think so. And yeah, so, there's lots of different things going on. Obviously, we talk lots about this on this channel, but I think it's really interesting to pay attention to this one specifically because the volume of capital and the accessibility of capital in the US has been such a major driving factor in the significance of the US over the last several decades. And this could be the factor that cracks that and all of a sudden opens up so many more opportunities elsewhere. So let me know what you think. I would love to hear, do you think that I'm totally off base? Do you think that I'm a moron? Tell me. Do you think that, hey, listen, there's something that I'm not seeing? Tell me that as well. I would love to hear your insights. Those are my insights. What is the flip side of it? The flip side of it is, I think the most important thing, if I'm to ask, hey, listen, where should I maybe be going, is where are the places that are attracting that capital, right? Where are the places that people are investing in these things? Where are the things that the people who are investing in these things are going, right? That's probably a place that's going to bring a lot of talent. It's going to bring a lot of capital. It's going to allow you to reinvest and grow. And that place is probably going to thrive. And so, you can kind of take a look and say, hey, listen, is that Portugal? There's a lot of crypto people moving to Portugal. Is that Dubai? There's a lot of crypto people moving to Dubai. Is that Ukraine? There's a lot of development talent taking place in Ukraine. Is that somewhere else? Is that Singapore? Is that wherever? So paying attention. Would love to hear from you what places you notice. So where is the capital going? Where are the returns being realized? Or if not, they're being realized, then once they're realized, people are going there. Would love to hear your thoughts. All right, smash the subscribe button, smash the notification bell, hit the like button. Really appreciate the support. I'm going to see you guys on the next video.